previously discussed the future of investment operations as organizations look to drive efficiencies and to leverage their operating models for differentiation. Today, we'll take a look at the growth of private market investments and how the operating model will need to adapt to support this growing and important trend. Joining me today are my two partners, Adam and Val. Welcome.
Thank you.
My first question is for you, Adam. Clearly, this private markets trend is significant. Can you set the stage for us?
First, let's talk about what we mean by private markets. So those are our alternative asset classes: the infrastructure, real estate, private equity, the huge growth in private credit, and some of those hedge fund activities as well. I think a significant driver behind the increase in those private investments is that the public markets alone are not expected to generate the returns required. And that's leading to consideration of those alternative asset classes, where we would have seen perhaps a 70-30 or a 60-40 portfolio split in favor of those public markets. It's now looking more like a 50-50 or even a 60-40 in favor of the alternative asset classes. That brings a number of challenges. Those private market investments need to be supported differently from an operational perspective compared to their capital markets counterparts. Much of the industry is still on a steep learning curve with respect to that operational support, and that's extending out into the vendor ecosystem as well.
Those are, I think, some significant, market changes. What do you see clients sort of struggling with in particular?
So each private market asset class brings a unique challenge from an investment, process, data, and talent consideration. Those alternative investments tend to have more complex deal and tax structuring requirements, which can vary by asset class and by geography. They're also difficult to value. Those pricing inputs are less observable in the market. They're valued less frequently versus the public markets, and there are also reporting and governance challenges on top of that. I think put that together and it makes timing of entry and exit into the market difficult.
I think I'm going to turn to you, Val. We just heard challenges spanning the whole operating model. When it comes to kind of designing a new operating model and reflecting these changes, how would you advise clients to think about that?
For sure, Kai. We can start looking at the impact from a number of different angles, starting with technology and data. The unique considerations of each asset class make it very difficult to have a one-size-fits-all technology solution, which also means that the vendors typically tend to be more niche and less mature. The nature of these investments and differences in asset classes also carry over to the data that they require and also generate, making it difficult to achieve a total portfolio view. Now, from a process perspective, private investments and related processes are more complex, as Adam earlier mentioned, including being able to capture the underlying funds data, the risk and performance portfolio monitoring against benchmarks, valuations, and financial reporting. And let's not forget the skill sets required to support operational and technology aspects. All that's to say that if these components are not done right, it will create a very costly operating environment and also limit the ability to scale.
No, those are some tremendous insights. I think you've both given us a lot to think about. This brings us to the end of our session. So Adam and Val, thank you for joining us today. Today we discussed the growth of private market investments and the evolution of the operating model required to support it. Please join me next week as we explore the importance of a total portfolio approach and the challenges organizations face in its implementation.